Hey, let's get back to a little bit. That's not technical difficulties. That's land difficulties right there. Just I was goofing off, looking at the markets, waiting for the time to start. And then the time got away from me. And so I was like, oh, I better start my class. I hit all the wrong buttons. And, but here we are. So you got a little bit of a backwards starting time frame there. I always have to throw up this little screen here because that's the law of the land for me. I have to have a disclaimer at the beginning of my video. If I don't put a disclaimer at the beginning of my video, Uncle Sam comes and gets mad at me. In fact, he did that once. Little old Uncle Sam came in and I had a whole bunch of videos that didn't have a disclaimer at the beginning of my video. I had them all at the end. So, oh, no, that's not good enough. You got to have a disclaimer at the beginning and at the end. So I have to put a disclaimer at the beginning, and they made me delete like 400 videos, literally like 400 videos. So I had a YouTube channel that was really big and lots of great videos, and, thousands and thousands of views on my videos. And they made me delete them all. And I had to start almost back to zero with my YouTube channel. And then that was a different YouTube channel. So then I went over and started this YouTube channel. And so it's kind of starting all over from scratch again. So anyway, that's how this thing works. You got to follow the government rules. And even though it's rules for thee and not for me, there's a lot of financial channels out there that don't put up a disclaimer at the beginning of their videos, but I was told I had to, or they were going to shut down my business and shut me out, turn me out, fine me. So I got to do something most people don't because I'm registered with the government. I'm a registered entity. And so I have to follow their rules. So different rules for different folks. All right. That's how you're going to know if you're dealing with somebody who's registered with the federal government, a registered person. They're going to have a disclaimer at the beginning of their video. If they don't have a disclaimer at the beginning of their video, they're not regulated by the government. They can say whatever they want. They can lie to you. They can all kinds of stuff. If I start doing stupid stuff like that, I get in trouble. I get in trouble just for not having a disclaimer at the beginning of my video. They shut me down. So they come and watch me pretty close. That's what it means to be registered. Why are you registered, Land? Well, I don't know. Because I'm in the business. I'm in the industry. I'm an industry man, I guess. All right. So what did we say we're going to do? This is Power Hour. So we're going to start off with, I want to start off looking at the news. So we're going to come in and we're going to look at the economic news. Now, I know the economic news is kind of something we look at in the morning bell because it's going to affect how the market went throughout the day. But I want to look at it in the afternoon session just to see what's been going on throughout the day. Now, first thing in the morning, we had 6:30, we had retail sales, and that caused the market to run and burst a little bit. But here in the afternoon, these are all AM. We've got a 2 p.m. net long TIC flows. I don't even know what that is. What the heck is that? TIC flows. The United States decreased U.S. millions of May, U.S. millions April, long net tick flow in the United States, averaging. What does this mean? What is the tick flow? Copy. Let's go ask. Oh, that's not what I wanted. Why did that come up? I want this. Oh, I accidentally clicked one of their headlines. Okay, here we go. Let's just type this in and say, what does this mean? Explain in layman's terms. The data about the net long TIC flows provides insights into the movement of international capital in and out of the United States. Let me break it down in simpler terms. TIC stands for Treasury International Capital. These flows measure the movement of money in and out of the U.S. through purchases and sales of long-term securities like Treasury bonds, corporate bonds, and stocks. Recent change. In 2004, there was a net inflow of $123.4 billion into the U.S. However, in May 2024, they revised dramatically to a net outflow of $54.6 billion. What this means, a positive number indicates more money flowing into the U.S. than out. A negative number means more money than the U.S. then came in. On average, since 1978, the U.S. has seen a net inflow of about $29.2 billion per month. The highest inflows ever recorded was $261.90 in March of 2021. The largest outflow was $134 billion in April of 2020. Economic health. The recent shift from a large inflow in April to a significant outflow in May could indicate changing perceptions about the U.S. economy or better investment opportunities elsewhere. However, it's important to look at longer-term trends rather than just month-to-month changes. Clear picture of overall. Okay, well, that makes sense now. That makes sense. So what this is talking about is the inflows and outflows of money into the U.S. Treasury. So this is 123,000. I'm assuming blue is good. That's in. So this is out, negative numbers, 54 billion out. So what we're going to check and see, we're going to find out today at 2:00, I guess, as the market closes, whether we're going to have an inflow or outflow. The previous was 54. The consensus is 56. So it's going to actually turn around. So that should be good for the stock market. On tomorrow, it should rally, right? If that comes in true, we have to watch that and see. But that's basically what the way I read that. All right, inflows money coming in is a lot better than money going out, so I guess that'd be positive. All right, we're not getting a whole lot on this is the NASDAQ 100, and we got the range bar 25, and the market's just kind of dead right now. So I did do a little bit of practice trading this morning, just before this class started, about an hour ago, and brought me up $475. You can see over here. Let me make this bigger for you. You put me up here. So you can see that brought that in. $475 is where we're going to kind of start. And that's just, I was making all my buttons, make sure they were all set up correctly and that I had my strategies working right. So that's what I did there. So we're going to kind of sit on our hands right now. There's not a lot going on right now. This is the range bar 25 on the NASDAQ. We got the Dow. This is the range bar 6 on the Dow. That might be tradable. It's a little bit smaller. I don't know. It's not moving far enough to get your stops to break even. It's kind of dead too. It's just a smaller time frame. So range bar 6 versus range bar 25. The market's really not moving. There's kind of dropping. We are in a downtrend. Everything's red on the way down. So that is a sell signal right there. That is a little sell signal right there. Not real anxious to take it because the market's being so quiet. But I guess we could. I took it hit the wrong button. Lan, you are a comedy of errors today. I hit the buy button when I meant to hit the sell button. We'll see. I probably should watch it back off and stop us out, and we'll wish we would have kept the buy. The market's just not. It's dead. It's not doing anything. It's just going to take away. See, we got stopped. We should have stayed with the long. The accident would have been better trade. How about that? So we're going to kind of go. Let's go look around here. That's the range bar. That's the NASDAQ. So it's rising. You can see this is a range bar 25. It's real choppy. Look how choppy on the way up, smooth on the way down. Remember what that means? It means that we're in the accumulation distribution mode. So this is the distribution, and then accumulation is choppy, and then we'll do distribution again. We should get another down, and it should be smooth like this. Accumulation is choppy, distribution is smooth. All right, so we're going to come and take a watch at that. This is the Russell 2000. There's range bar 6 on the Russell. That other one was the Dow. That was the Dow. So this is the Russell. I think I said that was the Russell. That's not the Russell. That's the Dow. This is the Russell. So we got the Russell in here. Pretty dead. Got a little flag formation occurring. We got a nice little trend line going up there. A little shelf is what I call them. This is drive 1, drive 2. So this is drive 1, drive 2. We're getting a counter trend. Maybe we'll get a drive 3. What do we get on the way down? There's our, oh, wow, 4 drives. Drive 1, drive 2, drive 3. Tried to rebound and got us a drive 4. And that's your Wyckoff spring right there. See that? We came down on the drive 3 and broke that. That's a Wyckoff spring. And when that happens, boom. That's why we saw that market go. It's indicative of a pullback, knock everybody out. just as they take off. Now we got a little ABC top formation here. 1, 2, 3. A, B, C, D, E, F, G. Came right down to the 100%. It's making another one right now. So we're coming in here, here, up to here. Is it going to come down to 100%? That's the question. We watch it come down, back down to the same level down in this little region here. Probably be pretty choppy if it goes all the way down, back down into that region, but that's what we're looking at. We could put one on if we wanted to. We could say, okay, we're going to sell one here. Wait for it to drop. Put a second one on just in case we need two. All right, there it goes. See how far down it goes. It's going to try to break those blue lights. Let's see if it can break through there. That's the natural trend line right there, the horizontal. Okay, there's our stop coming in all by itself automatically, trailing on the yellow dots. Here's our profit taking order. We're going to put this in right. One of those, we'll put them in right there. Bring that limit got way down there. We don't need it down that far. Bring it up a little bit. Okay, it's backing off. It broke through, but now it's pulling back. It needs to continue to fall. Come on, buddy. I don't actually want to fall. I'm long this market with real money. But we are getting a little pullback. I got a good story to tell you. Let's come in here and say hello to some people while we're waiting for this market to do something. We got Bruce R coming in with the gold. Nice to see you, Bruce. First thing, we got Michael Bruce coming in with the silver. I talked to Michael Bruce today. Had a nice long conversation. I'm gonna tell him a few things about our conversation, Michael Bruce, if you don't mind. And Kirk Schwartz, nice to see you with the bronze. We got more people watching the class. I can see the numbers up there. If you want to say hi, you can say hi, and I'll make you famous. No more. Sorry, there's no more medals to be handed out. We got our gold, silver, and bronze. We got a copper. Somebody throw up your symbol. I'll give you a copper. All right, we're just waiting for this thing to come on down. We got that yellow dot trailing, but it's trailing slow. It's not moving very fast. I had a really good conversation with Michael Bruce today. He set up a bowl session with me. Wanted to show me how he's been doing, just to check in and say hello. And it was a great thing. We had a good conversation. I could see his screen, and he was showing me, one of the things that really impressed me about Michael Bruce is this guy is absolutely doing it right. He is killing it. He's got his spreadsheet set up. There we go. Did we touch it? Touch it. Touch it. Take it. Take it. Take it. Come on. Get up in there. Take that thing. There we go. So we took one off. Give us a little bit of profit, about $100, right? So now we're waiting, see if the next one will come down. We got the trailing stop. I got this sit at 130, just inside 130.9. That's our golden ratio to the Fibonacci sweet spot. We'll put it right up there. 200 on that projection. We'll see if we can't get it to come down into this region here. Break that Fibonacci, or break that, what do you call it? Wyckoff spring. Break that Wyckoff spring. Come down, test it. Look, it came right down to it, touched it like a train on rails. Now we just need it to go a little bit farther. I don't know if we'll get it to go all the way down to 130.9. We'll wait. So one of the great thing about Michael Bruce is he tracks everything. He tracks everything. He doesn't let anything slip by. He's got my spreadsheet, and he's taken it and modified it and created it, made it his own. So he's got my spreadsheet from Pit News Magazine. So the spreadsheet that I use to control, to track what we do here in these classes, he's taken that spreadsheet and he's made it his own, and he's tracked everything for the last, it looks like almost a year he's got in there, where he's got all of his sections for all of his trades. And then he's got a log book where he goes through, and every day that he traded, he takes a picture of the screen of what he traded, and he's got notes next to it. So as you go down through his book, He's got all the pictures of everything he traded, all the patterns, all the charts, and all the notes down the right side. And you can go back for the last year of Michael Bruce's trading world and experience, and you could see every single thing he's done every day, along with the spreadsheet that shows you how much money he made and lost. That is dedication. That is what you need to do to really take hold of this market and make it your own. Look, there we are. We're almost down there. We're going to get it. Is it going to go all the way to 130.9? It hit 100. Let's see. There it goes. Oh, look how close it came to our limit order. Come on, touch it. There we go. We got it. And it hit that 130.9 just like a train on rails. So we took our full profit on that one. We went short with 2 contracts. That was good. I'm happy with that. I'll take that. It was about $250. All right. So Michael Bruce has this beautiful series where he's gone through, and you can see from the beginning where he had a lot more red days, and as he got more experience and got more practice, they went more green and then more green and then more green, and he's got months where he's got lots and lots and lots of green, very few reds. And he's decided it's time to go with real money, and he started to trade real money. Now he's got a whole new set of spreadsheets, all just for his real money. And amazing stuff. I mean, he goes through and he documents everything he's doing. So Michael Bruce is now trading real money, and he's working on that emotional discipline. So that's what we talked about today with Michael Bruce, is his emotional discipline, because he knows how to trade. He's been doing this now for almost a full year, and he's got all of his spreadsheets. He's got all his strategies. He's got everything all built out. He knows what he's doing. He's just got to now make that transition from demo trading over to emotional trading with real money. And that is a hard switch. And I was telling Michael Bruce, I said, look, I traded over $100,000 in and out of my market, in and out of my position today. But when I trade real money and start scalping and doing some of this day trading stuff, I still have that emotional feeling of I got to get it back itis. If I get down, I got to get it back, and I feel like I need to jump in there and get it back right now. I can't wait. I can't wait for an hour, or I can't wait for 2 hours, or I can't wait for another. That's a good enough setup. I'm going to take it. That market's going to go, and I'm going to get my money back. I got to get back itis, And so even with as much experience as I've got, and with having traded, $100,000 is a lot of money to me. So when I'm putting 100,000 in, or pulling 100,000 out, or I've got 100,000 in this market and 100,000 in that one, and 100,000 in this stock, and 100,000 in that stock, and 100,000 in this stock, and you're moving the money in and out, and you're taking profits, and you're cutting losses, and you're trading. I don't day trade those big dollar amounts. I don't come into the Russell 2000 and day trade with $100,000. I don't do that. Those are longer term investments, and they're holding on, and I'm just capitalizing on moving money in and out of the market. And I'm, taking the little bit of profits as they come. And then I have my dividends, and they pay me dividends. And that's just kind of how I live off my money that I've got in the markets. And so that's a lot of money over there, but it's not the same thing. It's not the same emotional connection that you have to the market when you're day trading or scalping. And even the smaller amounts, like if you're down in the micro mini, it's still an emotional connection that you have with the market that you're trying to overcome, and not have that fear of loss or that too much greed, right? Know when to cut your losses, know when to walk away, know when to double down and triple down. It's all a game of being able to kind of connect with the market and feel with it. And it's difficult to overcome those feelings of fear. I mean, you've done it in the demo account. You know what to do, because you can make lots of money in the demo account. But the minute you switch over to real money, it's a whole new game. And it's not that the game changed, it's that your emotional connection to the game changed. And so even when you got lots of experience with big money in one style of trading or one investment strategy market, when you come over and you do a different style where, it's more of a game. I mean, it is what it is. It's a game. We're playing a game here, and you want to be good at the game, and you don't want to lose the game. Um, it's that emotional connection, especially when it's real money. So just be mindful of that. When you start going into real money, and a lot of people jump into real money too quick, too soon, and then they lose a chunk of money. So then they go back to the demo account, and then they can never make that emotional leap into real money again. It's really difficult to overcome that feeling of loss and the fear of loss. So it's a real difficult thing. Most traders lose money or quit trading not because they don't know how to trade. Most traders who come and do this, markets can only do three things. They go up, they go down, they go sideways. And you can look at a market and you can say, well, if I would have gone short there, I'd have made money. Or if I'd have gone long there, I'd have made money. What caused that to happen? Well, I got this arrow. Oh, it was here, this. You can figure this stuff out. All right. Most logical people can look at a market like this and figure out how to make money in it. But doing it on the fly and doing it with emotions of this is real money this time, that puts a whole new game into play. And people will oftentimes jump into real money too soon, and then they lose their money, lose a little bit of money, and they go back to demo, and they think they need to practice more, and they never do go back to real money again. And it's kind of sad because this can be a wonderful experience for people. It can be a great way of having either a part-time income or even maybe making it go full-time. Just being slow and careful. The problem is there's so much money that can be made in these markets. I mean, we just made $250 in, what was that? 2 minutes? 3 minutes? You only made $250, Lan. You suck. I watched this guy over on YouTube. He made $6,000 in 2 minutes. You made $250. Okay, well, if you're willing to risk $6,000, go do that. It's an emotional jump. This is a beginner class. We're here learning, and we're not trying to dazzle everyone with brilliance and show them that I can make $10,000 in 2 minutes. But is that possible? Yeah, it's possible. That's the problem with this market. It's possible. And everybody wants that. They think they're going to come in and the very first thing they start trading and, I'm going to make $10,000 like that guy on YouTube did. He makes $10,000 every single day. Sure he does. All right. Well, if he's really doing that, first of all, does he put up a disclaimer at the beginning of his video? All right. So anyway, nonetheless, there's a lot of money that can be made in these markets. A lot of money. And people aren't happy with $100. Not happy with $200. Not happy with $250. But think about it. If you could just make $250 a day, that'd be life-changing to many people. And they don't think about it like that. They come in and they say, oh, well, I could make $10,000 in a day. Yes, you could. Probably not realistic for a new trader to think that that's what's going to happen. Very rarely have I ever made $10,000 in a day, and I've been doing this a long time. Maybe once or twice, or I can remember a day I made $8,000. But it's very rare that you make that kind of money. Now, there's some that do. I mean, if you go watch Ross Cameron, he's trading with $1 million account, and he's been doing it for 20 years. Yeah, that guy can make some serious money. But I've tried to trade like him. I can't trade like Ross Cameron. He's an amazing trader. He's a good teacher. But if you want to go try and trade like him, I don't know what it takes to trade like him. I don't know anybody that can trade like him. He's kind of a unique character. I love watching him on occasion. I mean, he's really, really smart. I got nothing but praise for the guy, but I can't trade like him at all. And that guy trades big money. And I think, and it's real money. I believe him. When he says it's real money, I believe him. So, there are those guys out there that can do that. But I'm not one of them. I don't make $10,000 a day, $100,000, $50,000, $60,000, $80,000, $100,000 a day. I'm not anywhere close to that kind of thing. I'm happy with $500 a day. If I can make $500, man, I'm feeling like I'm on top of the world. Right? So everybody's at different levels. Right? Everybody's at different levels. So don't feel frustrated. I know it's frustrating sometimes when you lose your money and you want to give up. Just don't give up. Just keep practicing and practicing, and then try again. Get to the point where you just make one live money trade a day. That's it. Just go in, sit there, and make one trade. Just one trade with real money. If you've been sitting on the sideline because you went real money and you lost some money, and you haven't gotten back into real money yet because you're like, I'm still practicing, I'm still trying. You'll never be perfect. You'll never get it all. You'll never figure 100% out, because you can't. It's not designed to figure out 100%. You'll never figure it out 100%. I've been doing this for 40 years and haven't figured it out 100%. You can't. There's always going to be indecision. There's always going to be timing issues. There's always going to be something that's going to make you lose money. You can't trade this game without losing money. You're going to lose some money. The name of the game is cut your losers short and let your winners run. And, get in there and try. So once you know how the tools work, you know how the game's played, you know how the charts are moving, and you're scared to go do real money again because you've lost some, just open up your real money account and sit there and wait. And sometimes you might wait for 3-4 days staring at your real money account and not take any trades because you're too scared. That's fine. Do that. Don't keep opening up that demo account. When you're looking at money, when you're looking at your charts, look at the real money chart. Look at the real money account and take one trade. Ross Cameron talks about this all the time. He goes through this thing and he says, hey, look, when you're brand new, and you got a small account, one trade a day. That's all you get. One trade. Win, lose, doesn't matter. One trade. And really what he's trying to do is get you over that emotional feeling of, I can't trade real money yet because I'm not ready. So go in, pull up your real money account, stare at your real money account, wait for the market to move, take your position. And if it doesn't make you money, get out and go back over and open up the demo account and trade all day on the demo account. But make one trade a day on your real money account. If you're in that situation where you're struggling and you can't decide whether you're ready to go real money or not, just make one trade. And you'll eventually get over that feeling and that anxiety of pulling the trigger with real money. But you got to start. All right. And that's the same for you guys who have never traded real money. You've been trading in the demo account for 6 months or a year. At some point, you got to trade real money. You get your account funded and go in there and make one trade a day. You gotta break the ice. You got to break the ice. Or you'll never do it. You got to break the ice at some point. And don't overtrade. That's the whole idea. When you first start trading with real money, you got to realize that it's a whole different game than it is in the demo account. Now, the charts are still doing the same thing. The software still works the same. Everything works exactly the same. But it's up here. It's your brain. It's your mental attitude. It's your psychological fortitude of trading with the difference between real money and fake money. And if you think it's not different, it is. It's big difference. It's a big difference. Even if you're in the micro minis and you're only trading, making and losing $20-$30, still a big difference. So one trade a day until you can really get comfortable feeling like you're ready to take that second trade. If you trade and you make your first trade, if your trade is green and you make money, great. Stay there and sit for a little while. Take a second trade. If it's green, stay there and trade for a little while. Wait. Take a third trade. And if it's green, if you make 3 green trades in a row and you're just like, I made 3 green trades, stop. Take the money and run away, right? Take the money, run away. Don't trade it until it's gone. That's another thing. People will make money. They'll make all this money. It'll be about $300, $400, $500. And they're like, I want $10,000 like that guy on YouTube. And then the next thing they know, they're down $1,000, $1,500, $2,000. And they're just giving it all back and going deeper. I got to get it back. Now I got to get it back. Don't get back-itis. Just trade. Make one trade a day, 2 trades a day if it's green, 3 trades a day if it's green. As soon as you make a red, you're done. And don't let that red lose and take away everything you've made. If it loses 50% of everything you've made, you've gone too far. Get out. Walk away with at least 50% of the value. Don't let that loser take everything away that it just made. So one loser can take away all the profits of 3 winners. Easy. So don't let that happen to you either. And then walk away. go over to the demo account, but at least trade once a day in the real money account with at least one trade. That's how you do it. That's how you transition from demo to real. All right, we're seeing another nice opportunity in here that I kind of missed because I don't want to chase the market. Let's see if it'll pull back a little bit. We'll take another short position here as this thing rolls over the top of this last little pullback. Pontificating and lecturing. I missed my opportunity. Don't want to chase it. So down here in the Fibonacci sweet spot right now. Let's see what it does. See if it'll come down and give us some yellow bars in there. If it does, we could look for it to come back down to the A drive. We'll see. This could be on the way back up too. We might be going this direction. ABC. So this might be the pullback. We're looking for the rally. That's drive 1, drive 2, drive 3. So we got 3 drives down. See that? Drive 1, drive 2, drive 3. Now we're getting a little ABC bottom here. Maybe we'll get the next rally up. Get rid of all these drawings. Let's look and see where. The worst thing it can do is it can just start to go sideways here. Let's go back from this one. Worst thing it could do. Worst thing it could do is just start to go sideways in here. We got 30 minutes till the market closes. You know what? Before we go, I want to go over and look at the options that we put on yesterday morning in the stock market. We got a stock portfolio going. We could take that first long right there. But that might be a pullback. Hit those yellow dots and then fall once again. Does that too, right? Yeah, let's try that. Now, the worst thing it can do is go sideways, bounce back up and stop us out. That would be a terrible thing right now. We're going to see if this thing's not going to go down one more time. We're going to see if we're going to get a little ABC to the downside here. I took the short position. Remember, markets can only do 3 things. They can go up, then go down, then go sideways. You have to pick one. It's called the 33-33-33 rule, right? 33-33-33 rule. You got to pick one. You're only going to be right 33% of the time because it can do the other 2. So we picked down. It could turn and go up, and it could go sideways. So we've only got a 33% chance of being right. So we got our stop in there in case we're wrong. We just get out. If we're wrong, we get out. Take a small loss. That's it. We were wrong. So we're out. All right. 33-33-33. So it's not going down. So let's kill that one. So it might be this little ABC. Are we going to get this rally here? We could try it to the long side. The worst thing it could do is go sideways. We put one in there just to see if it wants to rally. Now that stop is automatically programmed to jump to the ATR, but the ATR hasn't flipped yet. Oh, now it's coming back down. So that ATR has to cross over, close above the ATR. The ATR dot will cross over to the bottom side, and then that stop will jump up to it. Otherwise, it's just going to sit there, clear back here where we set it, which is a long ways back because this has been tuned in for the range bar 25 on the NASDAQ, and we're trading the Russell. So this tool was actually programmed for a different time frame. It's all right. We're sitting here. We can hit exit chart if it flushes. Market's just going sideways, isn't it? We can move it. We can grab it and move it. It's going to say, hey, I'm controlling that. Do you want to take over? I'll say, yeah, I'm take over. Move our stop up in there. Don't want to take a big risk here. Come on, you either need to go or get out. I like it when it immediately goes in my favor. If it doesn't immediately go in my favor, I just want to get out. Take a small loss. Yeah, that one flushed sideways. All right. So it's not going up and it's not going down. Not on the first try. Tried to go down, failed. Tried to go up, failed. Could try again. Try and take another short if you wanted. But right now, that's not a wise move. I think we'll just sit on our hands for a minute, wait for it to start to move. Otherwise, we get back all our money, right? Just wait. It's not doing anything. Let's go look at our options while we're waiting for that market to do something. Or we go look at another market. But I wanted to show you the options that we put on. So we put on our NVIDIA. We put on 3 of those. And we took one off, took some profit. So we're up 2,695. We've only got 1 day till expiration. So it's going to expire tomorrow because today's Thursday. We had this thing expire on Friday. So I like what we're seeing here on NVIDIA. I think we're going to see this thing continue to rise. So, I mean, we might get a pullback. We could get a pullback. You know, markets don't always go straight up. They get pullbacks. We might get a little pullback in here. It'd give us an opportunity to add some more to it. Now, this is if we come and look at the way this turned out, I think here, I'm gonna label this, all right? So work with me, and those of you guys who know what I'm doing here, see if I'm loopy. This is our X. Let's call this right here X. If we call that, because it flushed right there, we're going to call it our X3. X3 slash S. It's A1S. So we're going to call this one up here. We're going to call this one C1. And that's going to be a C1F because it failed. All right. So we're going to call that C1F. And it failed. It came into the C drive and failed and turned and started to fall, which caused this one here. Now, these are the probabilities, what we're working out here. This is the probabilities of where the market's going to go. This ends up being an X3 A1S, first short position. So that means this break right here would be an X. If that was a C1F, unless we called this one, because this is a lower high. Since that's a lower high, that means this over here has to be X3A1. This comes down. This ends up being, if that was the X3, this would come up, break that, and this would be A1S. This would be B right here. That means this would be a B1S right there. Right? So we're working out the probability table here on NVIDIA, trying to find out where the probabilities are at. Now, if you don't know how to read these probabilities, it's easier going up than it is down. Sometimes you have to think backwards. It's in my book. So in my book, you have the probability tables. And you can come in here. We'll just zoom through here real quick, and I'll show you right here. This is what we're working on, trying to work out the probabilities. All right? So this is all the probabilities. Where's my table? Right there. This is teaching you all about the probabilities. You get this book on Amazon. So there we go. So there's your probabilities. So that's what we're trying to work out here on the charts. You get that book on Amazon, just go search Lane H. Turner and it'll pop up. It's and it'll teach you all about the probabilities, how you read it. Because trading is like playing blackjack, right? You have probabilities. And so you want to know what the probabilities are. And I've got this little table here. So this is your blackjack probabilities card. Well, these are your probability tables for the financial markets. And those are in my book. You can go get my book out on Amazon, and this is all documented and lots of examples of how you read this and how you build these probability tables. All right. So this is a B1S, which means it's the second drive to the downside, which would make this would be your X1S. It's not going to be a C1F up there because that wouldn't be a C failure. That would be your X1S. So your first X to the upside, because it's a lower high. Since it's a lower high, that's got to be X1S. This is your B1. That would make this X2 right here. So x2, which would be also B1 to the long side, right? So this would be X1S. Oh, and this one here, X1S, but it would also be A1 to the long side. So no, that wouldn't be B1. Yeah, it would. A1 to the long side, B1 to the long side. X2S A1. So no, that's right. This is X2S slash A1 right there. So it's an X2S A1, X1S A1. So this is X2S A1 right there. That's where we got in on that X2S A1. So the first drive to the upside on an X2. So if we come over to our book, if we come over to our manual and we look at what an X2S A1 is, X2S A1 right there, X2S A1. And we go look at our probability table, X2S A1, X. Oh, these are all the, where's the X? Oh, right there. X1, X2, X2, X2. So exit drive B stops on the hard line and or the blue light. This is also a potential support level of the next C wave. Start, flag, filter, flicker, medium potential, trend, reversal. So this is your medium. We have a medium reversal on that one. That's X2. X3 would be exit drive C, multi-stop strategy, high trend, hard trend line and or blue light. Probability of a trend reversal is very high. High probability. But we're not on high probability. We got in on the X2SA1. So on the X2, we have a middle probability. See, on the A1, we have a low probability, and that's why that's the A1 up there. All right, so A1 was low probability, X2SA1, that's a medium probability. If we go to X3SA1, that's a high probability. So we got in on the medium probability right here. So we got a medium probability that that's going to be the A drive. That's what that's saying, A1. All right. So there's your probability table for NVIDIA, and we're long right now. The question is it going to give us a little pullback and then go up and make an ABC pattern like this? Or is it going to make another drive, which would be down, back up, and then flush and come down and create a new low? I don't think it's going to do that. I think if you look at the volatility of the market, the volatility is completely calmed right down. We haven't got much volatility at all. And I think this thing's going to, if it gives us any kind of a little pullback, it'll be a small one. Maybe a pattern like this. So a little bit of a pullback, then I think we're going to see a rally, or maybe a little pullback like this coming out, and then that would be right in there, and then I think we'll see it break out the top again. So tomorrow our options expire, so we have to make a decision, and I think we should roll some over. We should maybe, we could take one off. We've only got two left. We took one profit off already. We could take one off, and we'll make that decision tomorrow, but that's what we're kind of looking at here on the NVIDIA. And that's our big winner. That's the one we got the most money into. We got Carnival Cruise Line, which is a pretty obvious one. We caught that one really low right down here at the very bottom of that rebound. And it rebounded. So we'll just definitely, and that's just a quantity. We bought 10 of them because they were very cheap. We bought 10 of them for $520. It was $14 stock. So we bought 10 of them. We can go ahead and see, the problem is this is if that's our X3 SA1, this is actually X1. That's low probability that the market's going to rebound and continue a rally. Doesn't mean it can't, just likes to see an ABC pattern instead, right? The probabilities tell us it's going to break that, come down and create another one, and then go on medium probability or go down and do a third one on high probability. Or it might make a V recovery like we're anticipating with the rest of these markets, and this is just going to keep on going up, back up again. So that one we'll decide that tomorrow too. Tomorrow's Friday. We'll do that tomorrow morning. So those of you who want to come, and we'll roll all these options over tomorrow, but I wanted to kind of show these to you, show you what we got going. We got this one here, lousy lows. It's not taking off like we wanted. It's a little bit of a drawdown, but it's not bad. It's still coming in with this little ABC pattern. So we got this thing coming on. I think we're going to see it continue to rally. If not, that'll be our loser for now. Copart. That one, we just got about 100 shares on that one. Got our stop in there. We haven't got it pulled to break even yet. We'll do that tomorrow morning. So that's what we're doing in the stock market. Let's see. Has this market started to move? Oh, it started to go down a little bit for us over here. So we had this little sideways thing where the market danced around a little bit. That's pretty common, right? It can't decide whether it wants to go up or down. And then it went down. It started to flush right in here. We got our nice little arrow up and a little flip-flop arrow down. Now we're making it, broke that low down here, didn't it? That's another Wyckoff spring. Market comes down, breaks that low, comes up, creates that Wyckoff spring, and we anticipate a rally in price right here. Going into the close, are we going to see a rally going into the close? See if it comes down, breaks another low. We got this low down here looming at us. Got the blue light down in there. Got a long set of dots. We get a short set of dots and another long set of dots too. We could also get another leg down on this thing. We could go count all of our waves. So we got 3 drives down. We got an ABC. We got did it break those blue lights right there? It did. Made a little ABC top formation. Oh, we are in a downtrend, strong one, aren't we? We got a whole new, this is the reset from that 3 drive pattern. Now we're going and starting a whole new 3 drive pattern down again. Everybody's jumping out at the end of the day, it looks like. I took all my profits just before this class started. I took all my profits back in here. That market was up. I do kind of a dollar cost average out and a dollar cost average in on a lot of my positions, my longer term holds. I'm writing an article for that in Pit News Magazine. I don't know if it'll make it into this issue, but I'm trying to write an article that teaches you how to do that. Aidan Gray wrote about it in his article. And so I thought, well, I'll write an article on detailing what he just mentioned. So I don't know if I'll get that in there or not. Pit News Magazine. For those of you guys who, there's our 15-minute bell. So those of you guys who don't have Pit News Magazine, that'd be a nice thing for you to pick up. Pick up Pit News Magazine. Just go over to pitnews.com. It's the magazine that we use here in the class. And so all of the stuff that we do here is documented and written about, and articles, all kinds of really fun. Look at this beautiful market to the downside. Wow. Coming into the Friday close, or Thursday close. Thursday, not Friday. I thought we might get a little bit of a pullback right here and give me an opportunity to get in. Nope, it's just falling straight out. You want to chase it, Lan? You want to chase it? Not really. Probably feel bad I didn't, though. Man alive, look at this thing go. Guess we should have paid a little bit closer attention. We were looking at our stocks when it started, when that drop right there occurred. We came back right here. It was about right there when we came back. Right, or no, it was down here. It was breaking this low. So that's when we got done. We come and look at it right there. Oh my gosh, look at this thing flush. Not giving us one little minor pullback that we can get in on. Ugh. How much is that? From that drop to there, that was $250 with a $1,000 investment. Oh my gosh, look at this thing go. Good thing I took my profits off. So go get Pit News Magazine and you can learn all about some of these strategies. It's a great tool. You get it 3 months. You get 3 issues for $1. Listen to it. Each article is recorded, so you can listen to the articles. Then, of course, you have the written, so you can have all the notes, things that you can remember to go back and do. And then oftentimes we'll include video examples. All right. Is this going to be a pullback for a rally, or is it going to be a pullback so you can take another short? So go get Pit News Magazine. You'll love it. You know you will. I'm reading some of the comments. Jay says, "You are truly in my head right now." That must have been back when we were talking about trading real money. Made that comment. We're breaking again to another low. Man alive, look at that thing go. When you think it can't go any lower, that's when it goes lower. When you think it can't go any higher, that's when it goes higher. Jay's like, "Are you serious? Are you talking to me directly?" You know what, Jay? I was channeling you. Me and you. We're on the same channel. The thing is it's the same for everybody. Everybody feels the same thing. If you think you're feeling something that nobody else feels, you're wrong. Everybody feels the same thing. Everybody has the same experiences when it comes to these markets. We lose more than we win. We take strange, weird chances at stupid places and locations, and we're constantly feels like all we're ever doing is trying to win back our losses. And we're nervous and we're scared. Even after doing this forever, you still get nervous and scared and do stupid things and jump in and out. Kirk, it's good advice. Good advice. It's just, it's the way it goes. We're all the same. Even me. Like I said, I've been trading forever. And I got some accounts with some pretty good sized money in there that I trade in and out of. But I still, when I'm trading real money here on these scalping strategies, I still feel it in my belly. I feel I have butterflies. And when I get down, I feel bad. I'm like, I'm down $100. $100 isn't going to change my life at all. I'll be down $100. But it's not the point. It's you don't want to lose. You want to be successful. We want to be successful at this. And we've put a lot of heartache, study, and passion into it. And so when we fail, we feel like a failure when we get stopped out with a loss. Oh, I failed. You didn't fail. You succeeded because you took the chance. Take the chance again. Take another shot at it. Markets, you never know. Nobody knows when they're going to go up or down. I don't know. I thought it might go up right there. It didn't pop down and stop me out. Still might go up. That yellow dot's down there. If I put my stop on that yellow dot and take a long position, that's what I think when I look at these. I'm like, well, my stop's going to be on that yellow dot. It's not that big of a risk. If it goes, I'll make money. If it doesn't, I get stopped out on that yellow dot. And then I look back in history and I say, well, that yellow dot's been pretty good. Worked out pretty well most of the time. But there's times where the yellow dot doesn't work out. If I get caught in one of those, well, chance of it working out the next time probably get pretty good because it works out most of the time. So you just click your button and hope that the amount of money you makes more money than the amount of money you lose. Just don't lose a whole bunch. Just don't stay in there when you start losing money. Just get out. As soon as you're wrong, get out. Because it's a lot easier to recover from a tiny loss than it is from a big loss. There, the market's starting to move for us. Think we can put a second one in? There we go. We added one. We'll see what happens. Does Land know what's going to happen? No. We're doing this live. I can't cherry pick. We just got stopped out and lost all the profits that we just made. We had a nice little trade there, and then we added one in, thinking it might go higher, and instead of it flushed. Then we lost all of our profits. Didn't make anything. But we tried. I don't know what the market's going to do. Now you're going to feel bad because you're not short. Well, I was long. I didn't think it was going to flush like that. Nobody knows what this market's going to do. Oh, that was our 10-second bell. Land, you do know that. You do know never to be in the market on the 10-second bell. So never be in the market on the 10-minute bell, 10-second, the 10-minute bell. Never be in the market on the 10-minute bell. Okay, here we go again. See if the yellow dot will flip to the other side. If it does, we'll put a stop order on there and let it run. See if it'll run. There's the yellow dot. Is it going to go? I can put it in right now, and the stop will, if it touches the yellow dot, I get stopped out. Oh, see, good thing I didn't go in. I was waiting for it to go a little bit further above that yellow dot. Let's see what if it gives us another yellow dot. I'm just trading the yellow dots. Where's the yellow dot? As soon as it puts one up there, if it flips to the other side, we can go to the short side. That's the way this tool's set up. It drops your stop on the yellow dot. So I wanted the yellow dot to be there first, and it's a range bar chart, so it only has to go 6 minimum moves before it'll give me a new dot. But it's just bouncing back and forth. There you go. See how it dropped the stop right to the little yellow dot? Now, if it goes up and hits that yellow dot, it'll just stop me out. This tiny loss. Well, there we go. Lost again. That's how much I lose? $25. There's a yellow dot. I could take a short right there and put my stop on that yellow dot. But the market's just going sideways. I need to know when not to trade too. There it goes. Now the question is, how far do you think it's going to go? I don't know. Just trail down until it hits the yellow dot. Or we could put a limit order here at the VWAP and say, take us out at the VWAP. Then the market will pinch between the limit order and the trailing stop order. Now all you do is we got stopped out. Market didn't go. You want to try again? You just keep getting beat up. The market's not doing anything. 5 minutes till the closing bell. Now it might try going up. There you got a yellow dot. You want to try it? You want to try the yellow dot? Just put it on the yellow dot. Take the risk to the yellow dot. It's breaking above the blue lights now too. So all you have to do when you first start trading real money, come in, wait for the market to start to move. Make sure there's a long set of dots and a short set of dots. As soon as it switches over from a short set of dots and you think it's going to make another long set of dots, you click the button. Put your stop right on that little yellow dot and let it trail up. If it doesn't make money, then you're done. You're done for the day. Go out and switch over to the demo account and practice some more. But every day, just do one. Uh-oh. It got stopped out and hated our... Try to jump at the same time. Try to jump it into the bid-ask spread. So we got stopped out. See, the market's just not going anywhere. So can't trade now. It's dead. Got to know when to stop. Now, if you need a filter, you can turn on the stochastics indicator and you can say, look, I'm not going to take a short position unless the stochastics indicator is above this 80 threshold. So you can say, I'm not going to ever take a yellow dot to the short side unless that stochastics is up there. I'm never going to take a yellow dot to the long side unless the stochastics is way down here in this region. And you can do that. And that's a really good filter for you. All right. So if the stochastics is down in this region and you get a yellow dot, you can take it. If you get a yellow dot right there and it's up in that region, you can take it. But if you get a yellow dot right here and the stochastics is anywhere inside this middle box, you can't take it. Don't take it. All right. Because that's showing you the stochastics is neutral. This is showing you that the stochastics is way overbought. So it has a tendency to fall. And then this says that it's way oversold, and that means it has a tendency to rise. So you can use that as a filter. A lot of people will use that one. The CCI is really popular, but it's basically the same exact thing. So we're going to turn off this and remove all the drawings. So this is your CCI. We come in here, we'll make it a line. Most people see it as a line. So if it's above right here, you can take the short positions. If it's here, you can take the long positions. Very similar to what you'd be doing with the stochastic. I like stochastics a little better. So this is B. You'd take your, if it's RSI is down here, you can take your long position here. If RSI is up here, you can take your short position here. Now that didn't work out too well, but you got another one up here. You could take that one short if this is above that 100 level. So you could say, okay, I could take that one as soon as I get the yellow dot. Now you can take it a little early if you want, but I kind of want to wait for the yellow dot to flip sides. There it is. Drop it in. Now the stochastics is fallen. Technically speaking, you'd see that market fall. All right. So it should continue down. Is it going to do it every time? No, of course not. If it did, we'd all be rich, rich, rich beyond our wildest dreams. They just help you. They're little filters. Kind of help you sometimes. See? Failed. Now it's trying to go back up again. You want to take it long? You can. Try it. It's moving. Moving and shaking. Now, a lot of people will see these RSIs and say if it breaks above, right there, above the 100, they'll use that as a buy signal. All right? They'll use that as a buy signal right there. They'll use this as a buy signal right here. But when it's coming back down into the channel right here, they use that as a sell signal. Use this right here. This is a sell signal right there. There it is. Market just closed. Now we're in the futures market. We're in the futures market, so the market actually should stay open. Oh, wow. It's jumping all over the place right there at close. Close this out with a $30 profit. $30, better than a stick in the eye, but all right, that's it. That's it, guys. Market's closed. You can keep trading if you want to. Market doesn't close in the futures market for another couple hours or another hour. Now it slows right down, goes down to a crawl sometimes. But the other day, I mean, man alive, there was more action after the market closed than there was previous to the market. But usually right now you see it slow to a dead crawl. There's one more yellow dot. You want to try it? Try it. Doing some after hours trading. After hours trading in the futures market, you can still use your stop orders. You can still use your market orders. You can still use your limit orders. Can't do that in the stock market. If you're over in the stock market and you're in after hours and you're trading after hours, you can only use a limit order. So this is an after hours trade. See if the market wants to go long again. Trying to move it up to break even. Nah, didn't even make it to break even before it died. All right, guys, that's it for today. Tomorrow morning, 7:25 a.m. my time, Mountain Time, 9:25 Eastern. We are going to look at our options and we're going to do some rolling and see if we can't find some new options to get into. I don't generally like to get into options on Fridays. For some reason, we schedule options on Fridays. Why do we do that? Option day should be Monday. We should do options day on Monday, and we should do scalping on Friday. But we're going to do options tomorrow, and then we'll do options again on Monday. How's that? We'll switch the schedule. All right, guys, that's it for today. I do have a Sunday school lesson for you. Plan your trade, trade your plan. Don't fall in love with your trades. Perfect your exit strategy. Remember, the only way to bank a profit is to exit the trade. And the only way you cut your loser short is to exit your trade. So cut your loser short, let your winners run. Don't fall in love with your trades. Remember, it's just a trade. It ain't a lover. And you can always get in and get out again next time. All right, guys, that's it for today. That's all I got for you. We will catch you tomorrow morning, first thing for the opening bell.